All right, folks, it's a familiar pattern these days, right? Today's session, NASDAQ higher, Dow Jones Industrial lower, and the S&P stuck somewhere in the middle. Now, here's the thing. I think there are two buckets of buyers out there. Those who are chasing these hot growth stocks, which, by the way, seem to get higher upgrades and targets every single morning. In fact, this morning, Jefferies raised their target on Tesla. They think it's $1,200. Yesterday, they thought it was $650. And those also, there's another bucket of folks looking to buy those value names on dips. Meanwhile, the overall fragility of investors' psyche on display this morning, right before the open, when the CEO of Delta told folks on a conference call, shareholders, that 500 employees had contracted COVID-19 and 10 died. Airline stocks and Boeing immediately swooned, but keep in mind, that company has 93,000 employees. These days, intriguing news is having a greater influence on trading. Initial jobless claims saw an 11th straight week of declines, but missed consensus. Perhaps a reminder to go to work and keep this economy going. Well, that's a reminder, I hope, for Congress. But right now, to help me break down the market, Walser Wealth Management President Rebecca Walser. And I want to start with this pattern that we've been seeing, Rebecca. The NASDAQ, I think, is up 8 of 9 sessions. Most of your other indices kind of sideways. What's the message of this market, and how's it informing you and your actions in this market?
Yeah, it's a little bit difficult because, you know, you're looking at your blue chips that are not necessarily what you're always wanting to go towards. But it's the big tech, right? It's technology is floating NASDAQ and keeping it afloat, and it's been our winner this year clearly, and that's what we're still seeing. And we still haven't had just a breath of recovery, Charles, in the fuller economy to not see sort of centric recovery in specific sectors, and that's why NASDAQ is still performing so well.
Yeah, but, today, for instance, I'm looking at like some of these staples. They're still doing well. Church and Dwight, Clorox, Kimberly-Clark. So they don't have to sizzle, but there are some blue chip names that are performing, but it's almost an either or kind of day in and day out.
I know. And it's hard for people. I think there's such an emotional reaction right now, just like you were just talking about with the Delta CEO and, having those deaths. I mean, we hate to hear that 500 people and 10 deaths. But like you said, if we put it into perspective of 93,000 people are employed, and that's what their impact was, it's not to minimize it, but from a perspective of relativity, it's actually very low. And so this emotional reaction on airline stocks and Boeing it's just not warranted from a logical, mathematical perspective, Charles. I understand the emotional side, but remember, when you emotionally invest, that's when you make mistakes. So it's hard to see those things.
But by the same token, I mean, we've got this big market rebound from the March 23rd lows, and it's coexisting with extremely jittery investors. And while you may stay calm, cool, and collected, how do you adapt when everyone else seems to be losing their minds?
Well, that's the reason you have to have an actual plan. So, Charles, you've got certain kinds of investors. Some people are just looking for short-term gains, and they're really, the speculators are really looking for volatility. They make money off the volatility. That's great. But then most of America are looking for their 401ks to go up. They're looking for the long term. And so for those people, I'll say you need a plan. You need to have a plan. And if your plan is long term, if you've got more than 10 years, then, try not to look at it too much, because it's when you look at it and you get emotionally invested that you start to make mistakes. And a lot of people got out, Charles. A lot of people got out at the beginning of this thing, and they missed the upswing, right? So that was a mistake. So if you have a longer term, don't look at this every single day as if it's something that you're going to be looking, using tomorrow to live off of. You're not. So there's two different camps, and you don't have to follow the speculation.
Although, it's easier said than done when it's like, when those big down days in February and March, obviously, were the beginning, you couldn't avoid knowing about them. In fact, on this 401k thing, on a recent podcast, you talked about this, one of your podcasts, about 401ks in general and being a complete disaster for most Americans. Have they not lived up to the hype or the potential, or have people gone about it the wrong way?
Yeah, it's two things. It's two things specifically. So from an investment perspective, people invest emotionally. They transfer jobs and they cash their 401k out. They think, it's not that much, I'll cash it out. They do that many times. So that, from an investment perspective, that is a losing proposition. If you're going to follow emotion and you're going to cash it out, we change jobs a lot more than we used to. So that's a big problem. So that's on the investment side. On the tax side, as a tax lawyer, one of the things I always look at is what are the tax consequences down the road. And I have to tell you, the mass exodus of the boomers and this decade here that's really beginning in earnest in 2022 is not something that a lot of people are prepared for, and they're not taking any kind of tax strategizing steps, and that's also a mistake. So that's the other reason that it's a big problem.
Rebecca, thank you very much. Appreciate it.